Hello, I'm Kevin Flynn, and welcome to a holiday edition of Avalon's Market Minute for December 22nd, 2013. Well, after their worst week in months the previous week, markets had their best week in months last week. As I discussed in the previous week's video, the Defiance trade was indeed on, and markets rallied on the news of the Federal Reserve finally beginning its taper. Now, I would expect this sort of reverse celebration to continue for a while if historical form holds, but for how long will depend on how fickle the market's mood is. The markets do want to go higher into the end of the year. And despite last week's big move, they're not yet too short-term overbought, so apart from the odd day here and there, and barring any big surprises from abroad, it looks like the S&P will indeed catch 1850 by year-end. The ranks of true believers is growing every day, especially on the retail side. Now that is a bit dangerous and the markets are overpriced, but I don't see it coming apart yet. This is a sentiment-driven market, and sentiment is rather euphoric for the moment. Now, I won't be doing a video next week because of the holiday, so the question for this week is, will the move reverse in January, or indeed, will it reverse at all? Well, January is a possibility, but I don't see a big correction as being more than about a 25% chance. That doesn't mean the month will be positive, as there could be a lot of early selling from people finally getting a chance to sell some gains without having to pay an immediate tax bill. But against that is all the money pouring into equity mutual funds these days, likely to surge the first couple of days of the year. So sentiment is always tricky to predict, but I wouldn't be surprised to see something of a breather in the first half of the month. In the meantime, I wish you all happy holidays, a Merry Christmas to those of you who observe it, and a happy and prosperous 2014. I'm Kevin Flynn, and thanks for listening to the last 2013 edition of Avalon's Market Minute.